Entourage, and Dance Squad. Anyway, we got to jazz this up. All right. Hey, so good morning. Thanks for tuning in this Monday morning for our regular monthly or weekly update. I know lately I've been promising you guys we're going to get through this fast. It's going to be less than 10 minutes. I'm getting better. This is not. This is going to be a long one. I'm sorry. There's just a lot happening, and just a lot that we want to share with all of you. And so we're going to kind of jump into it. So anyway, if you're watching this on a recorded basis, if you have questions after the fact, put them in the comments. We'll see them. We'll do our best to respond. One question that I get a couple times a month, it seems like, and I was just getting teased for this yesterday, is, Jeff, what's with the hat and the t-shirt? Could you look any worse? Monday is our office day. We run like crazy all weekend, and so it's like, so come Monday morning, it's just, it's paperwork time. It's we're not getting dressed up today. So sorry, you guys get Homeless Joe for his weekly update. So, all right. So I'm just going to kind of jump right in with sort of the regular stuff here. And so has this Joe gotten old yet? Because probably not, but 3%. Yeah. So just, we get our little updates from various lenders pretty much every week with what are the current rates, and threes, man, it's everywhere. So it sucks, but I don't see it going away. We'll talk about rates later. Anyway, all right. So here's my little corny. Hey, Jeff, how's the market? Here we go. Lockbox activity. This is the week over week. Every time Jeannie and I open a door, it registers the activity. So anyway, week over week, Oregon basically flat. Now we're a little bit ahead of pace from last year. We're about to be a whole lot ahead of pace from last year, because you see last year we're coming up on the COVID blip. And I'll pause for a moment while we all stop and go, that was a year ago? All right, that sucks. All right. So anyway, the market's flat. We're kind of holding steady. Across the river up on the Washington side, same kind of thing. It's basically flat. They are also ahead of last year. They probably saw COVID coming a little sooner because their curve started a little bit more ahead of time. So anyway, arguably relatively flat. That's sort of the good news look of the market, because it looks like everything's calm, everything's nice and easy, and well, not quite. I'll also do another quick injection here. If you're watching this live, if you got questions while we're going, go for it. I am here, and we'll talk, because we're going to get a little nerdy. We're going to get a little data heavy coming up. So here's the real, hey, Jeff, how's the market? These are the February stats that just recently came out, and I don't even know where to start with this one, right? So let's start with the easy one. Hey, we're back to 1 month of inventory. Hey, Alicia, the market's great. So here we go. Watch this. 1 month of inventory. That's your good news. We're flat from last month at 1 month of inventory. Compared to last year, it's basically cut in half. So it's brutal, right? So there's not a lot to choose from. Things that are out there are going fast, as you'll see above. Average days on the market, 42 days. It was 44 days last month. It was 68 days last year. So we're going significantly faster than we did even a year ago. So there you go. And so 1 month of inventory for Gary. There you go. Compared to 2 months, basically, we're going to call it 2 months last year. So our inventory is cut in half almost. It's like a 44%, I think, reduction for the Portland metro area. Here's your big one. Average selling price for the month of February is $542,000. That's up 18.5% from last year. 5.3% month over month. That's the big one. Extrapolate that on an annual basis, we're over a 60% trajectory rate. That's not going to hold, thank God. But 542, I could not have even predicted that one coming. So that one's brutal, right? And so where our closed sales were up, month over month, year over year. I don't have it on here, but I think our pending sales for the month declines. We'll see a little bit of easing with our March stats when they come out. So March probably one of those months where we'll see the average selling price maybe dip a little, inventory may grow a little, which this market doesn't make any sense anymore. So we're going to kind of wait and see. But let's talk about this in a second. Hold on some of these thoughts here about the price jumps and kind of the general craziness. But this is your big thing. The market prices are going absolutely crazy right now. Portland and Vancouver side. Vancouver arguably probably a little bit worse. I don't think their growth is quite as high. But it's just as vicious up there, if not more so, because A, they have less inventory, and B, they have a nicer price point up there, plus a plethora of, like, say, single level homes, RV parking, things that a lot of people want. So Vancouver is even getting beat up even harder on certain categories here. So let's with that, let's jump across the river. Southwest Washington. So this is Vancouver, Camas, the Shug, kind of the whole surrounding areas. $482,000 average price. It's up 1.5% month over month. That's pretty normal or pretty healthy, I guess. You're still a 16% growth on that, which is crazy for the year. 15.5 year over year. So they're also double digits and going crazy. Like the Portland side, their market's moving faster, 33 days versus 36. It's cut in half from last year. So that market is moving twice as fast as it was even just a year ago. 0.7 months of inventory. So 2.5 weeks of inventory seems normal. It's not. It's ridiculous across the river. It's absolutely brutal. And it's down from 2.1 months of inventory at the same time last year. So absolutely ridiculous. Closed sales up 5% last month, and year over year almost 19%. So Vancouver area, the Shoe Camas, it's just as brutal, just as crazy, and so I wish I had some better news for a lot of you guys, but it's gonna be a little bit of tough sledding coming up. So I keep coming back to this chart. I think this is my favorite chart I've ever made in my professional career of 20 some odd years of work. So let me kind of break down how to read this chart. The little blue bars popping up all over the place. That's your inventory level. This is Portland metro area. This is your inventory level. Okay. So the green bar, the little green strip across the middle here, that represents your look of 4 to 6 months of inventory. That's what you would call a balanced market, right? Meaning it doesn't favor the sellers, it doesn't favor the buyers. Plenty of homes available for sale. Perfect, right? That's a nice little calm, serene world for everybody. So you'll see going back in the very beginning, and I think this goes back to 2000 or maybe the late 90s. On the far right, we for a while were above. It was sort of a slowed market, and then we kind of got into the early 2000s rush, which is sort of a good time to be in the market. Things got pretty heated up. You'll see sort of the cratering of inventory leading up to the Great Recession. You see the Great Recession there in the middle. That's the big spike when you couldn't give a house away. Now, the orange bar or the orange line that's kind of squiggly, that's your average selling price, right? So you see sort of that inverse relationship here, right? So as your supply of inventory is going down, those prices are going up. The supply demand. This is just easy, right? Because people are still moving here. People still want to live here. People still need houses. Investors still want to buy houses here because they know urban growth boundary. We're landlocked on where you can build. It's a great market if you want to own either own a single family home or own investment properties. Portland's a great area. You saw the prices drop during the Great Recession, and now you've seen they have been on a tear lately. Meanwhile, look at the inventory level, right? And I wish I should have thrown on there, and I can't do like a third axis on this graph, but if I could overlay new construction starts, you would also see an implosion of new construction as it relates to during the Great Recession period. So 13 months, or I'm sorry, but 8 to 10, maybe 13 years of undersupply of new construction. They're trying to catch up now, but even if you held demand and growth in the market completely flat, let's say it's 10 years of undersupply from building, you need at least 10 years of an equal and opposite oversupply just to offset. But then you factor in the fact that the market has grown, millennials are coming, people are moving here. United Van Line said that we're one of the top destination places for movers. If we had undersupplied by 10 years, we probably need 20 years of overgrowth just to catch up. And now, here's your TLDR with the urban growth boundary. It's not going to happen. So this inventory deficit, I think, is here for at least a decade. So again, supply, demand. I don't see how prices get better. Now we'll have affordability conversations later on. We'll get to that part here in a second. So don't jump ahead of the slides. So that may cool, and you'll see conversations about, hey, the market's going to tank. The bottom's going to fall out. And what 9 times out of 10, if you read the article, what it's really saying is, hey, we're seeing 15% growth, 18% growth, year over year in Portland. It's not sustainable. The market's going to implode and it's going to drop all the way to 3% growth. It's still growing. That's still up. And it's also 3% on top of an 18% growth. So think about leverage, think about the magnification effect of the math. And it's still ridiculous. So this is my favorite chart. Just if you're a data nerd like me, this tells the story of what's happening in Portland. We don't have supply. Supply and demand rules the day. Prices are going up. So there you go. So that's your high level look at inventories. Now let's kind of take the deeper dive. within the Portland metro area, and this is for the month of February, kind of the bottom 5 in terms of who has the least amount of inventory, which is pretty much everybody. It's Beaverton, a low area. And again, this is going to be a lot of price point driven, right? Half a month. Hillsborough, Forest Grove, 6/10. That's going to be probably driven from, a little bit of just a nice price point. And then Hillsborough, of course, you have the tech corridors. People want to be out there. Gresham, Troutdale, totally about pricing. Tigard, Wilsonville, a little bit of a surprise if you ask me, but it's just, those are demand areas. People, Wilsonville, great little area. Tigard, nice little area. People like to be up on Bull Mountain. Northeast Portland, not a surprise at all. Top 5, West Portland. I need to put a big giant asterisk next to that one. I think somebody called this out last time I shared this graph and asked like, hey Jeff, does that include condos? Yeah, it does. So, 2.9 months, 3 months of inventory in West Portland. It's great. No, it's not. It sucks in West Portland, unless you're buying a condo, in which case you probably got 12 months of inventory. When those say there's condos galore in the Northwest area. I can tell you West Portland is savage for a market. We'll talk about stuff here in a little bit, because I promised you guys that's going to go unscripted, and actually for what that's worth, this whole thing's unscripted. So yeah, I'm just flying here. Yamhill County, Columbia County, North Portland. Whether this is just, you start getting kind of more of the geographical dispersion, right? So where do you have more options to buy? Yamhill County, because you have to go a little farther out to get there. Columbia County, you got to go farther to the north, Scappoose, St. Helens, Rainier, you got to get kind of way up there, find a little bit more homes. North Portland, I think North Portland is going to be a little bit of a story of I hate saying the word gentrification, but kind of, it's north, NoPo is going to still be sort of, it's the up and coming, it's the developing. There are pockets of Kenton has been on fire for forever. Other pockets are not. That's always going to be kind of a mixed bag. And then Northwest Washington County, just you get a little bit more rural at that point. So it's interesting where you have more affordable, or where you have more homes available. It's going to be kind of more of the geographical dispersion, and it's just a smaller population of people who either can or want to live out there. Beautiful areas, but if you work in Portland, it doesn't do a whole lot for you. All right, I talked earlier about, we were going to talk about affordability as one thing that can slow down this market. So, and we talked about, I think maybe 2 months ago, our monthly newsletter we send out to people. We talked about what I call the cost of waiting, right? So I put this together just the other day, and this is going to be a little nerd deep dive here, but the 2 lines here, the blue bar the blue line on the top, that's your average sales price in the Portland metro area. The orange line is the affordability, or basically it's the payment on that average house using Freddie's reported average 30-year mortgage rate, assuming a 20% down payment. Okay, so the stated rate at the time for the average price. Do the math, right? So you'll notice for forever on the chart, these things are following each other. That's just math, right? So as prices are being driven up, largely because rates, we're doing some nice little trends. Things followed along quite well, and this goes back, I think, 10 years. So you had a nice little break here. Now I wish I could point on top of the slide, but it doesn't work for me that way. So instead, let's look at, if you go to the far right, towards the far right, about 3/4 of the way over, you see the 2 lines kind of converge, right? It's been so that they follow sort of real close, and then they converge for a second, right? So let's kind of look at what happened here. They converge and then they opened up. All right, this is what we've talked about with people of not so much a time is of the essence. You got to hurry up and jump, because we don't want to push anybody into doing anything you don't want to do. But this is one thing we've talked about. This is your gift, right? And we've had a gift where prices have continued to climb. The price of that home, or the cost, I should say, the cost of that home, the cost of buying that home declined, right? We opened up a chasm, right? This was your gift. Suddenly, it was more affordable to buy a higher priced home, which is the dumbest thing you can think about. But because mortgage rates tanked, you had that ability to capture a home cheaper than you had before, at a bigger dispersion, right, from a cost basis, if that makes sense. You just kind of get your head around that one. Now, if you look at what's starting to happen, rates, or the home values are blasting up, and that payment's blasting up, right? And I think what you're going to start to see is that chasm. How do I get in the window here? That chasm you're seeing between the prices and the cost. I think you're going to start seeing that closing back up. That chasm, I think, is about to go away, because we've got rates on the rise. Now, do home prices outpace the rise in rates? We'll have to wait and see. But even if they do, even if let's say this takes 6, 8, 9, 12 months for that gap to close, That's money in the bank for you. If you're buying, you're still ahead of the game. You've gotten that cushion. Purchase, ride that curve up the rest of the way, riding those property values. 18.5 is not going to hold up year over year for forever, but we're not going to see implosions on values. You see what I'm saying? It's a gift. The clock is ticking. I think that clock is going to run out probably in the next 12 months, but we'll see. I've got that chart on standby. I'll keep it updated throughout the year. All right, let's go a little bit more, just general discussion, a little bit of nerd fest here. This is me chopping up an article that I saw online. The housing market saying a tipping point after a stunning year, blah, blah, blah. Okay, it's a tipping point. All right, fear. So let's break this one down. Within the same article, this is where I hate these articles, but let's break it down. And this is me doing the copy paste of the key points of the same article, talking about a tipping point, which nobody reads the articles, right? We read the headline and go, tipping point. It's all about to go to hell around here. So yeah, let's break it down. The first bullet, and even is a sub bullet point underneath the headline. In fact, it looks like a perfect storm for a correction. Here comes the fear. Oh my God, what are we doing? No, everybody stop, everybody stop. Okay. So then they added that Fitch rating claimed that prices nationally were 5.5% overvalued. Let's think about that for 1 second. Let's say that that's true. The article ends 100% supported. 5.5% overvalued. Our market's going to drop 5.5% in Portland. Okay, I just went up 5.5% from last month. So you want to have 1 month and you want to take it all back? I don't care, right? The math is there all day. I'm 18% year over year. I'm going to give 5% back. Okay, I'm 13% year over year. So these articles are just stupid, because then it goes on to talk about there's an epic housing shortage, right? And this is national. So let's go local. Portland. We've got the urban growth boundary. We don't have anywhere to build. Builders are struggling, right? Well, I just wrote the next bullet point. Builders are struggling. Material prices for lumber have skyrocketed. They basically have doubled for framing lumber. There's a shortage of labor because contractors are busy. Try to get a contractor to a job site right now. It's crazy. Lots are rare. Those prices are up. So everything together, 26 grand to the construction cost of a new house. Well, guess who's paying for that? And guess what that's going to do to the prices of new construction, right? High tides rise all ships. New home construction goes up. Come on, guess what your resale market's going to do? It's going up too, right? And you talk about, so here's the rise of the single family rentals, because they're kind of talking about this part, I think, dovetailed after they're talking about affordability issues and prices going crazy. People, are you pricing people out? Maybe. Are we getting there? Sure. So it's the rise of single family renters. People still need a place to live, so they're just going to rent. So they still need a house. So now you've got the flood of investors saying, I'll pick up a house and I'll rent it to you. You got a landlord, because you got to live somewhere. So yeah, how that's a tipping point for the market. It's not. It's just a stupid article. But all right, let's get back on track. They did talk. So this, another survey kind of put out this story just showing kind of households that can afford homes in various markets, by different price points. Portland metro area were $540,000 for average price. So it puts us right in the middle of the band. 8.1 million. I don't share it for the numbers, just more kind of that you see the compression, which kind of makes sense, right? The higher price point, that the fewer people that can afford it. But there is generally a squeeze that's happening on affordability. But again, it is what it is. Let's go back to the gift. Talk about the gift. We had the prices, the cost of paying for the home. The chasm's opened up. Things look nice. So hey, hey Jeff, what's happening with mortgage rates? Well, hey Riley, what's happening with mortgage rates? I'm going to steal more Riley stuff. So Riley Hayes with Root Mortgage puts out a great weekly newsletter. If you want to go full nerd on the data, Riley stuff is great. So in this newsletter, he's talking about just showing treasury yields, which is what you're going to drive your mortgage rates, and sort of directionally what was happening. And kind of see that whole downward section. Like this looked hopeful, right? Are things going to continue to decline throughout the year? And then suddenly you see them kind of curving back up. It's like, yeah, this did not look all that great. So that's sort of the directional. You've seen sort of the ending of the party of the rates. If I can get here, my next slide doesn't want to show up. None of my slides want to show up. Well, this is going to be a horrible presentation. All right, thanks. Be Live TV. My slides don't want to show up anymore. So, all right. Well, the next one basically just showed talking about the directional trend of rates. They had tanked. They had bottomed out. Riley had one a while back, and I've shown this before. And if I get the stupid thing to pop back up, which I just cannot do, That's frustrating. Okay, well, he was showing kind of his opening up of rates between direction that treasuries were showing. I'm trying to reload it. I just can't do it. Okay, well, we're stalled out. So, um, but it showed sort of, treasuries going one direction, rates dropped even significantly. It's sort of a departure from what guides the rates. Talking that was sort of, it's an abnormal thing, and that has been closing right there. Actually, that has closed, and now we're back to a point where mortgage rates are following the 10-year Treasury yield like they should, like they have done since the beginning of time. Now we're back to that, and the 10-year Treasury yields are starting to do this. So I got this chart. It looks like this. And, anyway, sorry guys, I've blown up on slide content here. So anyway, so the treasuries are picking up. Mortgage rates are picking up. I should probably throw the 3 slide back up if I can put up any slide right now. So yeah, your mortgage rates are just kind of starting to get there. Mortgage rates are not getting any easier, or qualifying for a mortgage rather, it's not getting any easier. So people who think like this is 2008, I'm going to wait for that next correction to come around again. I'm going to buy on the bounce when prices drop 20%, 50% again. That's when I'm going to buy my house. You're losing that bet. I'm promising I'll eat my shoe if that happens again. Mortgage rate or mortgage qualification is as tough as ever. The standards are high. They're probably getting higher. COVID has spiked. A lot of people wanting to really monitor what's happening. Rates are getting tougher. It's a scrutinized world right now. The last news bit I was gonna kind of share here is home prices is starting to alarm policymakers. There was a story that came out. I don't even know where I saw it. I think Apple News. And we have seen something lately where some of the government agencies basically came out and said if you're buying non-owner occupied properties, investment properties, the pricing on those mortgages was going to go up a pretty significant amount. And this just came out last week. So a lot of our mortgage guys, even Riley included, are like, that's not why. They're talking about, we're all trying to figure out, because it was sort of a little bit of a surprise move. At least that's what it sounded like. And I think what's happening is I think the feds are trying to throw some cold water on this market, at least for the non-owner occupied, because as you're getting fever pitched, home prices are skyrocketing, 18.5% year over year. Well, a lot of those are going to turn into rental properties. Well, if you're buying a house for $500,000 and you're up 20% from last year, I need a higher rent to cover my mortgage nut here. So those rents are going up. So now your renters and people who are out of the homeowner population, they're going to get squeezed more and more. And then you start talking about kind of economic disparities and so on and so forth. And I think it's the right thing. They are trying to kind of cool that part down. Be curious to see how much difference it makes. Probably not much, but they are trying. So, all right, I'm at 23 minutes. I'm going to go just a little bit longer because we did talk about it. I'm shocked to even save this for the last. And for those of you, a couple of you guys that are hanging over there with me the entire time, I love having a crowd. I don't know why. I see 2 little eyeballs. And I love it. So I don't know who's still there, but I know 2 of you are there. So appreciate that. I did promise I should have done this up front, but I talked about, let's just talk about the market. Let's just, let's take the gloves off. Let's share some real stories of what's happening. Because you read a lot of news stories of like, everything's multiple offers, cash wins every single time, or, there's just a lot of stories. So let's share some real life examples. How about that? Because I've got several from the weekend that just make it kind of frustrating. So let's go to a variety of price points. Looking to make an offer on a condo for a client, mid 200s. Been on the market just for a couple of days. Put an offer at $15,000 over. Mid 200s, 15% or 15,000 over. That's a healthy percentage jump. We just took second place. The first place was significantly higher. I hope it's cash because it's not going to appraise, but that's for somebody else to figure out. So that's okay. You can get your head around that one. It's a low price point. I get that, Jeff. I'm not surprised. Okay. $600,000 Northeast Portland house needs a little love. Cute. Needs a little love. Location's good. Needs a little love. It was on the market for a day. We went and saw it with one of my clients. He said, "Yeah, I want to write an offer," and he gets it. He's like, "I'm going to write an offer for 50 grand over day one." Or I guess it would have been the second day he was on the market. Reached out to the agent. We're going to write an offer. And he said, "Great, we've already accepted one, so it's gone." On the second day, this house did not sit even for 2 full days on the market. Gone. Northwest Portland, other client, $1 million property. We're at $1 million price point now. Gorgeous property, gorgeous location, absolutely unreal. Perfect. Looked at it, fell in love with it. Great. We're gonna write an offer. $65,000 over asking. No problem. Solid. We'll cover the appraisal. We'll throw out some other things to kind of creatively address our offer. Second place. All I know was the other offer was dramatically higher. So there is stupid money at every price point. There's a shortage of inventory. For home buyers, it's tough sledding right now. But kind of what we tell people is, it's going to take a few swings before you get your hits. But you know what? They're all out there. So you just if you're trying to figure out what to do and how you're successful in this market, I say it's easy as I share my 0 for 3 over the weekend. Sucks. Worst week in a while. But at the same time though, I'll be back in a week with three accepted offers. That's I'm not worried about it. Price is everything, right? It's you got to be competitive on price. You hear the anecdote, cash is king, somewhat, right? If it goes too high where it won't appraise at that price point and the banker won't lend on it, yeah, cash is king. If either you're putting a big enough down payment that your lender says we don't need to do an appraisal, or you have enough cash reserves or you're big enough down payment, let's say you're doing 40% down, bank still wants to do an appraisal, whatever. You've got built-in cash, you can cover that appraisal shortfall, in which case it doesn't matter. The only thing cash does is close a little bit faster, right? Which the only thing that favors it really at that point is it still is maybe it's a week or two of less risk, right? There's less chance you're going to get COVID, get hit by a bus, change your mind, whatever. But so cash is not always king. Just got to be creative on the offers. There's all kinds of inspection changes of time periods and rules of engagement and so on and so forth. One of my last offers I did, I think it's up in the Washington side, is I cut my inspection time in half. So it's like I'll get it done in 5 days. By the way, my day one would be the day after acceptance, and I've already got my home inspection scheduled. Yeah, we won that offer easily. The price was good. It wasn't dramatically high, but just little things like that. I'll tell you on day one, we have a deal breaker from the inspection. How's that for making your seller comfortable? So it totally works. It just takes creativity. It takes time. It takes patience. I go back to my inventory by area slide. You gotta know where it's hot, where it's not, and yeah, good luck. So brutal market. It's tough. It's fun, and there you go. So that's your weekly update. I told you I was not going to go short on this one. 27 minutes, and I felt like I was still going a mile a minute. So if you have any questions about any of this kind of stuff, I think the updates following the monthly statistic release are always going to be my long ones. I love this time of the month because I love picking apart what's really happening in the market. So appreciate the patience. Two of you guys, you're still hanging in there with me. All right, thank you guys. Rock on. So if you have any questions, please put them in the comments on the feed later on, and we'll do our best after the fact to answer them. We'll still see them, and I'll answer questions at any time. And there you go. All right. Have a good week, everybody. Talk to you soon. And I'm hoping it'll even let me sign off since I can't even put up my slides anymore. All right. Take care, everybody. See ya. It's not even let me stop. All right, I'm just going to close the browser tab, I guess, and we'll see if that shuts down my feed. All right, well, I'm trying to close. All right.